Yeah, so I own a financial planning company. It's called Intentional Living, FP, as in financial planning. Um, I guess it's typical. I mean, it's typical for me. Yeah, we help. For the first 2 years, we work specifically with young families who are pursuing early financial freedom. So I refuse to bring on clients who are over the age of 45. Um, we just opened up a couple months ago a more we'll call them traditional client, older client age demographic to make room for a new CFP who I'm hoping will join in the next 12 months. So now we work with all different types of clients. But yeah, it's basically we live anywhere and everywhere that your life and your money meet. It just happens. Now, do we do what most people do? I guess like we talk about tax planning and estate planning and insurance and retirement, all that fun stuff. But personally, I don't think it's obscure, but it is not by not by design, but just by where things are right now. That pretty much all of our clients own Bitcoin. So in that context or that sense, yes, we are strange. I did a podcast probably 2 years ago with Blue Collar Bitcoin, and they titled it "The Black Sheep of Financial Planning" because of that. I'm not a big I'm not a big hit with most traditional CFPs out there because of my desire for clients to own Bitcoin and everything. So that's all right. It's not a popularity contest. I'm trying to do what's best for my clients, and I think that's part of it.
Yeah, well, I'm sure we'll get into that quite a bit, but yeah, I can definitely attest to that. I've been very fortunate to speak to many financial planners and traditional, traditional folks over the last couple of years, but especially the last 6, 8 months or so. And it's funny how there continue to be these two different emerging groups that you have. You have the one group that's very large that kind of like you're saying, kind of views us all as black sheep. And there's the other groups, such as yourself and a few other financial planners I've been able to speak to that are like, yeah, we're the black sheep, but we know they're black sheep. We know that we're completely oddball. And it's funny how they're like these two different worlds, and there's very little crossover, at least as far as I can tell. There are very few people that are open to Bitcoin, let's say. There are people that are either against it or don't understand it or avoid it, or there are people that are have many of their clients or encouraging many of their clients to do that. So okay. So you're unique in that perspective. You're also unique in the perspective that you focus on young people. I'd love to hear more about that. Why do you focus on 45 and under? Because for especially, probably a lot of people know, but baby boomers, the older generations, of course, are the people with the most money. So I'm sure you're leaving a lot of money on the table by focusing on younger families. Why do you do that? What's your focus there?
Yeah, well, gosh, yeah, I've left a lot of money on the table. When I was first starting this company, I had a few parents of friends who wanted to work with me, but I passed up. Who just those couple of people I could have made a lot of money working with and serving a traditional asset management fee, but that's just not who I wanted to serve at that time. And again, we are opening up. So I'll start off big vision, and then we'll come back to where we're at now. So long term, I want to have 12 to 15 advisors who all specialize in specific niches. So like I want to have 2 to 3 advisors who only work with retirees, and 2 to 3 advisors who only work with entrepreneurs, and then 2 to 3 advisors who only work with more of our traditional young families, and 2 to 3 who only work with real estate investors. That way we have specialists in different areas versus being a generalist. That was a catalyst for this. So I worked, I don't know, 5, 6 years with the like traditional clients. I spent several of those years working primarily with physicians who were either about to retire or have already retired, which is great. And I loved working with them. But the thing is, I heard so many stories of regret that it was like, man, if I could have caught them sooner. And I had so many people them tell me that, like, if I would have met you when I was 30, my life would be so different. And that was two reasons. One, there's the financial decisions and the things they navigate on their own versus having a guide. It's like, man, after I've had about 40,000 of these conversations. So after having enough of those conversations, I'm able to look around the corner of someone who's in their 20s and 30s and 40s and say, like, look, I don't know exactly what life's going to look like for you, but I've talked to a lot of people who have navigated similar things to where you're at now. And I think I have an idea of what you're probably going to navigate down the line. So there's that. And also I've heard a lot of regret, not just financially, but also life. Like I've worked with a lot of people who own or have tons of money, but the money, they miss the point. Like I've had countless people cry in my office or in front of me about realizing in one moment that everything they had worked for and saved for and invested for has already slipped by. Like so many people, like, oh, I always wanted to have money so we can make memories with our kids and give them the experiences that we didn't get to have when I was a kid. And again, I used to work with old people. I was like, oh, it's great. Like your kids are grown. How was that? How was being a mom and a dad? And how was your kids' childhoods? And man, so often they would sort of stop and like, yeah, I don't know. We were busy working. It's like, dang, that's so sad. The whole purpose you did this went by anyways because you got so caught up on the means rather than the vision itself. So I want to interject and come alongside and guide people through those decisions. And then lastly, so it's super long-winded. Lastly, like my typical client is basically my wife. Her name's Kendra. My clients are basically Kendra and me. Like my average client's about a 34-year-old married couple with 3 or so kids. About 80% of our clients own businesses. About 70% of our clients own real estate outside their primary residence. Like I know the conversations they're having when they're laying in bed at night. And so many financial planners, we're so caught up in like spreadsheets and Monte Carlo simulations and stuff like that, which is great. Obviously, like my clients pay me to care about their money, but like I care about my clients way more. And it's like when they're laying in bed, I doubt the wife rolls over and is like, hey babe, I've really been stressed about our small cap mutual fund. That's not what's going on. It's, man, I'm really stressed at work. And now that we're about to have this third kid, can I please stay at home and be with the kids more? Can we do that? Or, hey, we need to get a bigger house. Like, what should we do with this current house? Like, those are conversations I have many times a week. So those relate to numbers, but it comes back to like the story of their life. And that's what I love. And the longer I can be with those people navigating those stories and decisions, the more gratifying it is for me.
I think that's such a good answer. I think that is so
If
important.
nothing else, a really long one.
Well, no, but a really important one because I think all too often what we see now today is that we have people pursue two different like coaches. Let's say they work and work and work and work, and they amass all this money, and they need to have somebody to manage it, or whatever, like a typical financial person. But then also they're feel this devoid of meaning in their life, and so then they also have to find like a life coach or a personal coach or counselor or mentor. Neither of those is a bad thing, but I think it's so unique being a financial planner, but also viewing yourself as, you didn't say this, but more or less like a life coach too, of like helping people really establish what their actual vision is. And this is something that Jeff Booth always says. He said it to me when he and I were hanging out, and he says it all the time in his podcast. But he says that most people, if you really ask them what they want, they can't articulate, they can't define it. So anyway,
Yeah.
that's really cool. It makes sense why you would want to aim at the younger families then too, because you're younger. You're working alongside people in your demographic more or less, and you're helping guide them so they don't make those mistakes when they're younger. So that's pretty cool. Yeah.
It's a lot of fun. And you're right. Like an issue I see with a lot of financial planners, especially new in the industry, they'll just come out the gate and ask clients like, hey, so tell me some of your goals, which sounds like a good question, and it can be. The problem is if you just come out shooting with what are your goals, the majority of people default to things that aren't truly important to them, but rather just, I don't know, ringing off things they've heard other people's goals are. It's like, oh, I guess I want an airplane and a house on the beach. And then heck, myself, when I was a teenager, I really wanted to have my own plane. And then a guy I was driving with one day at work, and he asked that like some goals, and I was like, oh, it'd be so cool to have a plane. He was like, why? I was like, I don't know, be able to get somewhere easily and quickly and all that. He's like, oh, you don't want a plane, you want easy access to places. I was like, yeah, I guess that's it. I was like, well, that can be solved way easier. And that's where so many people, they stop at those peripheral things. Like, oh, I want to have a house in the mountains for vacations. It's like, why? Well, it'd be cool to have a place to be able to make memories with my kids. It's like, oh, so what you want is a place to create moments and memories with your family and the people you love. If we go back to that as the value, and then the house being more of a goal that stems from that, that helps us navigate the possible trade-offs, or not even the trade-offs that will happen. Because what's going to happen is if you're caught up in the goal, let's call it a mountain house. If you're caught up in the mountain house and it's going to cost you $4 million, and it's like, I've got to have this because my kids will love it and we'll have memories. And then suddenly you're working every weekend and you're not there to tuck your kids in bed at night, and you're missing their baseball games. And all of a sudden they're 17 and like, hey, we can get that mountain house. Like, Dad, I don't want to go to your mountain house. You were never there for me as a kid. Why the heck would I want to go spend the weekend with you? It's like, man, you missed the whole point. You didn't want a mountain house. You wanted a place to spend with your family. We have to go back there. And if that means it's a house in the mountains, like, that's fantastic. But it's not about that. And that's where most people don't understand. Like, that's what I love about my job, is that. that stuff. And it goes back to the numbers, but those are the things that really like. That's why I do this.
Yeah, but the numbers are the means, they're not the end. Yeah.
Exactly.
Yeah, that's a great way to put it. I get asked a lot, why do I work so much? Because I do work quite a bit and perhaps too much, but it's for me, I have that similar vision of like, it, yes, I'm working, but I don't really care about the money. I care about the freedom and the ability to have the time when, I don't have kids yet, but hopefully when I'm your age, in 3, 5, 10 years, when I have kids of my own, that I'm able to more focus on that and be a part of that. And anyway, I think a lot of Bitcoiners are younger. I think my demographics, like 90% of them are male between 35 and 55. So like right, actually even a little older than me, but right up your demographic too. So I think it's a very good reminder for everyone, and not just the demographics watching this, but everyone, that the money is not the goal. The stuff is not the goal. Yeah.
Yeah. That's so I've noticed this pendulum swing over the last 15 years, 10, 15 years from like traditional retirement to like, I don't want to do that to I want to pursue FIRE, financial independence, retire early, which sounds great, but that can be equally as dangerous. Like so many people in the FIRE movement work in a job they hate for way too many hours and neglect building relationships and doing things that are important to them now. So like when they're 37, they can quit work and go and backpack Southeast Asia, which sounds cool. But the problem is I've talked to a lot of these people, and so many of them, they like finally have enough money to quit their job and retire at 37. And like, all right, I'm going to go do this trip. And it's like 4 weeks later, it's like, man, I'm pretty empty. Because what they were doing, they were running away from something they hated rather than pursuing something that was important to them. And that's where you have to start with articulating, like, what are we trying, like, what's important to you, not what do you hate about your life that we have to get out. That's so dangerous. And again, that's where a lot of people in the traditional FIRE movement can get off. I'm not saying like don't throw the baby out with bathwater, and there's great principles in that, but that the preparing for goals and lack thereof, both it cuts both ways, and you want to make sure you're not caught up in one side or the other.
Yeah, well, the problem with FIRE is when FIRE, again, financial independence, retire early. The problem with that is when that's elevated as the goal, but it's like that's not really the goal. The goal is, what are you doing in that retirement? Like, are you building things that you actually find beauty and value in and future opportunity in, not just monetary, but otherwise. And for me, that's why Bitcoin and the Bitcoin space has been so engaging for me, because I feel
Mm-hmm.
that I'm, just like this. It's like, these kinds of things. It's like, sure, they'll probably bring me more opportunities in the future. Yeah, sure, probably I'll be able to make money from this. But it's like, I genuinely believe in this thing. I genuinely believe that the people involved with this thing are really quality people, yourself included. And it's also like, I think it's going to be a better world. And so, yeah, I'm working hard now so I can buy more Bitcoin, save more money, sure. And yeah, I'm working hard so that hopefully eventually I can turn this whole thing profitably. I'm spending all this time and all these resources and traveling and going to speaking events or whatever. But it's like, at the end of the day, like, I'm perfectly fine if I don't make money from this, because Bitcoin, we'll get into this in a second, but Bitcoin obviously we think has a positive impact on the world. But it's like, if that's the case, then that my kids are going to be in that world. When my kids grow up, they're going to be in that world. So even if I don't make money, even if I don't have any material benefit to myself, it's like, well, the whole reason why you would work young and save money is for your kids to have a better future. And so it's like, to me, that's why it's like such a slam dunk, because it's like, yeah, sure, I'd love to make money, but at the same time, even if I don't, it still works out because I get that end goal of hopefully having a better future for them, even if in my little small part of advancing. So I guess it's more just, I love it. I love your perspective. So how does this more holistic, more life vision perspective, how does that work with Bitcoin? How did you come across that? What's your story with that? And how did you cut through that stereotype, let's say, that the people that are buying, speculating, gambling, whatever, in Bitcoin are trying to get rich quick or have the money as the goal and not just the means?
Hmm. Okay. Would you want me to start like how I got into Bitcoin? Would that
Sure.
Okay, we don't have to. But let's see. I first heard about Bitcoin in 2012. There's a guy I worked with. my wife and I lived in Colorado as we were poor newlyweds. And there's a guy I worked with who always asked our bosses to pay us in Bitcoin. I didn't really have much weight in what he would say, though. This guy, I think, was stoned a significant majority of the time. So I didn't really think about Bitcoin too much from those conversations. And then really I could loop it back to Preston Pish and Stig Broderson on the Investors Podcast. They started talking about it really early on, like just more of a curiosity, not as, as before Preston was, had Bitcoin fundamentals or was orange pilled. It was just a curious asset conversation. But that piqued my interest again because it had been a few years since I heard about it. And so I started dabbling in Bitcoin, not as certainly not in the capacity I am now. It was more of a fun to invest in thing versus, where you and I are at today. I worked at Fidelity for a period, a large institution at that time during like 2017 or so, when the ICOs and all that big stuff started happening. So that was interesting. I saw a lot of people get really burned. So that's probably impacted how I view Bitcoin as well. And then, I continued to buy some more until March of 2020, when I really started thinking about money itself and saw the perils of government intervention, when I basically moved all of my personal assets into Bitcoin. I was at another firm at that point and was not able to really talk about Bitcoin or solicit it to clients. So, which was odd. I have really close relationships with most of my clients, so I couldn't talk to them about it, which is really conflicting for me. I left that firm in January of 21 and started this. And from basically day one, Bitcoin was part of how we do financial planning. It makes sense. And again, like, it sounds weird. There's only a handful of financial planners who really advocate for Bitcoin. And I think I know all of them. We're all pretty much in a study group together. A lot of other like super smart people who understand this asset and the role it plays in financial planning. So I view it just as a normal part of financial planning. Most of my clients are normal people. They're not crazy Bitcoin people. They're normal people that come to me because they have normal people needs with their money. And then I don't introduce them to Bitcoin right off the bat. I've had a few people reach out on Twitter and say, hey, if you're into Bitcoin so much, why don't you talk about on your financial planning website? It's like, because I don't want to scare people off. I don't have to be all brash with it. So it's part of what we do. Like, I'm not leading with Bitcoin. Bitcoin is something that I think everyone should own. So I think if I put it too much out there, people think that I'm crazy. Maybe I am. That's okay. But yeah, so how our clients own Bitcoin. Like I said, pretty much all of our clients, we bring on a few clients per month. So I wouldn't expect someone who just started a couple of weeks ago to own Bitcoin quite yet, because we're not even there in that conversation. But I usually wait a handful of meetings. Like, we've already talked through like their life vision and values and what's important to them and their goals. And we've created a full financial plan that consists of tax planning and other big parts of financial planning. And then multiple meetings into actually walking through them as a client and helping them make progress with their financial plan. Then it's like, hey, let's talk about investments today. So when we start talking about investments, I say, hey, just as we go into this, I want to let you know I am sort of odd. And then you should know this, that I personally, and then pretty much all the families we work with, own Bitcoin. And I leave it at that for a second, let that soak in. You have to preface. So there's a book called Never Split the Difference by
Voss?
who is it? Yeah, Greg Chris Voss.
Chris,
Not Craig Voss. Chris Voss.
Yeah, he's
Chris
great.
Voss.
Yeah.
So good. And that's something I take with that stance, is like, look, you're gonna think I'm crazy. You just disarm them, because they probably will think you're crazy. So it's might as well get it out there. Like, look, you're gonna think I'm a nut, but we own Bitcoin. It's like, oh, okay, yeah, I do think you're a little bit crazy, but at least you recognize it. And then I ask them, like, instead of saying like, here's all the reasons why I own Bitcoin and run a node and like hash rate, it's like, dude, you're killing me here. Why am I speaking another language? That's crazy. I wouldn't own that thing. It's like, I just asked them, what have you heard, or what do you know about Bitcoin? What are your thoughts about it? We start there. It's all about disarming. Let them get it off their chest. Because the problem is, if you come out the gate swinging like, oh, it's the best money and blah, 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 number go up, they're not going to hear any of that, because they're in the rack of their head. They're going to think, dude, I have so many friends who lost money in Bitcoin, or I use it for Silk Road when I was a teenager, and it's drug money or whatever. They're only going to be thinking about their biases. Let them get it out first. And then once we have their permission, say, here, well, I would love to talk with you for a moment. Why Bitcoin? And before we can talk about why Bitcoin, we have to start with what is money and what are traditional and historical stores of value. Is it okay if we go there for a moment? And that's how we approach that conversation.
That's fascinating. Yeah, that I think that's the best way to do it. It's interesting because yeah, I've talked with many people one on one about Bitcoin, and then now also I talk about a lot online. And it's interesting how in person is very different than online because online you're just putting out the message, kind of like hitting people over the head with it because you're reaching a wide audience. But when it's one on one, I think this is where a lot of people miss it, is that it's a different medium. And you can't have the discussion one on one with people in the same way you can online. You're not going to be convincing, not just with Bitcoin, but with any idea. You're not going to be convincing if you just say it's the best, it's the best, it's the best. It's like you have to meet people where they are in their biases, where they are in their technical understanding, where they are with their past experiences, where they are with their personalities and the personality traits. I think that's something that people really underestimate, but people have different degrees of agreeableness, they have different degrees of curiosity. And so, I think some people are more incentivized by positive motivation, like, oh, Bitcoin can make you money. And other people are more incentivized by, oh, Bitcoin will destroy your other forms of money. So I think individuals have such, it's been said before that the ultimate minority is an individual. And so it's like when you're talking with just one person about Bitcoin, you have to like really address it to them. Where they are, and every person's at a different spot because we all come from different places. So that's fascinating to me. I love to hear. So for you, you being you as an individual, what was that moment in 2020 that really caused it to click? Because funnily enough, like many people, that's when they became in hyperdrive wanting to learn about it. I was about the same period. I was a little later in 2020, but I was about the same time. So I'm curious for you, what was that light bulb moment that really converted you from just speculating and dabbling with it out of the curiosity into, like you said, moving all of your, because you said most financial planners, they're like, wait, what? All of your assets into Bitcoin at that time. What was that? What was that individual moment for you?
Yeah, I think it was sort of an easy shift for me. Um, if I think back to college, like economics made zero sense because all they teach is Keynesian economics, and it was like this doesn't seem like it would work. What are we doing here? So when 2020 happened, and all of a sudden like the money printers were turned on, also we had these COVID relief checks, and it was like this makes zero sense from a control perspective, from a value perspective. Like, how's this thing going to retain value when you just create more of it? That doesn't compute for me. Um, so I started thinking like, all right, we need something that's a hard form of money. So I really started thinking through gold and like buying gold miners, or will the winner be Bitcoin? And the more I started learning about Bitcoin, like I said, I had been dabbling in it for several years, but at that point I was like, all right, I really need to learn this thing. I can't sit on the sidelines and hold it just passively a small amount. And so I just took it upon myself to start being educated as much as possible. And then in my opinion, it became evident that Bitcoin was the best form of money that we have and have ever had. Yeah, I think it came out of a demand for a search for hard money.
So why Bitcoin? Obviously many Bitcoiners understand why, but if you have your financial advisor hat on and you're trying to explain to somebody, say like one of your new clients, and they're like, why Bitcoin? Why not gold? Why not gold stocks, like you said? Why not something like Litecoin or Dogecoin or some other, like, why not some other digital token or something like a gold-backed digital token? Like, why Bitcoin? So I hear what you're saying, but what would be, how do you approach that? How do you explain that to people?
Yeah, to give an adequate answer, we have to start with what question is being asked. You can't say buy Bitcoin, not Dogecoin or not Ethereum. It's like, well, why? Well, we have to start with the question. And the question is, the money's broken. What's a good form of money? Why is it broken? Because it's centralized in control and more can be created and manipulated. Okay, so the answer we need is money that's decentralized, that can't be manipulated by a group of people or a person or an entity or a country. That's what we need. And Bitcoin is that. It's similar to gold in that sense, but it's basically gold, but better. It's easier to transact with, to transport, to hold. It's easier to verify. Yeah, there's it has a lot of the principles of gold that gold bugs like, but I think it's just better. But again, that's
Yeah,
where I think a lot of people get it wrong is oh, we love these assets because it's going to go up. It's like, well, maybe in the short term, but why did you buy it in the first place? I'm not sure. Okay, we need to start there. Otherwise, you're just holding something that's super speculative rather than you're owning something because of a revolution or whatever you want to say that is about Bitcoin, but much
yeah,
deeper than we hope it'll go up some.
yeah. I think it's a major difference between the Bitcoin tourists and the hardcore crazy Bitcoiners, is that the Bitcoin tourists are in it for the price. So when price goes up, they think, oh, it's the best thing ever. And then when it goes down, they think that that must mean that it's over. Whereas people like you or me, I think that are perhaps a little more on the crazy side, we we buy it because we believe in this idea. We believe the specific articulation of the problem, like you just did, in ways that most people don't. And then we believe in Bitcoin being the most probable solution to that problem. And therefore, no matter what price does, we have a certain degree of conviction that pretty much no one else has, I
Yeah.
think. And
Does the issue still exist? Yes. Has Bitcoin changed? No. Okay, let's keep going.
yeah, yeah, exactly. Like Bitcoin could just keep going down and I would just buy more. It could just keep going up and I would just keep buying more. And I think that's something that makes us appear like we're crazy. That perhaps for in other people's eyes make it seem like we lost our mind just because like we literally don't care what price we're buying because we believe that it doesn't matter.
Yep.
And the irony is that if it is a solution to that problem, then price should only go up.
Yeah.
Yeah. Yeah.
That's
So
I mean, it's important that you have that conviction to be able to do these things, and convictions only long-term conviction has to be built on education. That's why, like with our clients, I make sure they're well educated because education builds conviction, which then builds strong hands. That way, when Bitcoin drops from 69,000 to 16,000, you don't have people running for the hills, but rather saying, "Hey, I like this thing. Let's buy more." It's the same thing with traditional assets. Like when you're doing just a traditional like risk tolerance questionnaire for stock to bond ratio, if someone doesn't understand the probable volatility, they'll get shook out. That's similar. And I tell this illustration I use with my clients. I'm not smart enough to give concise answers with direct things. So I work in visuals. So I talk through is like Bitcoin moves a lot, and we want to make sure you're allocated properly. Um, and we're not buying this off of FOMO, but rather education and conviction. So if you hold the wrong allocation of Bitcoin or any other asset, that would be like if you own an asset because you think it's going to go up and all of your friends own it. Um, that would be like getting on a roller coaster because you're at the amusement park and all of your friends want to ride it too, and you start going up and you're going up. You're like, all right, this is pretty good. Oh wow, this is way higher than I thought. Oh gosh, I don't want to be on this thing. Then you go down this big drop. That's like if you sell an asset at that point, that's like taking off your seatbelt as you're just plummeting down. Like, look, you cannot let go at this point. Assuming you bought something good in the first place. Obviously, if you hold trash, you should sell it regardless. But uh yeah, if you're not convinced that this thing is stable in its true core, you're going to be like someone who takes off their seatbelt on that plunge, and that's a terrible idea. You shouldn't have gone that ride in the first place. AKA, you shouldn't have bought as much or whatever.
hmm, that's fascinating. I'm I love to ask you perhaps something a little more controversial. I think a lot of people do that when it comes to traditional finance, traditional assets too, like say indexes or bonds and things like that, where we buy it because that's what's normal. That's just what everyone does. And even though there's valid value there, I think most people are blindly buying these things because they're just going up the roller coaster. They don't really understand what they're doing. It's just that bonds and stocks have done nothing but go up for 40 years, more or less, with some minor blips in between there. But do you think that's true? And if so, what kind of hidden risks could be there?
Yes, it's true. Why does that exist? It's because people need to have their money retain its value and purchasing power. So the way you can have your money retain purchasing power is buying a mixed bag of assets, aka buying the index, and assuming that over a long enough period, you'll be able to weather any type of market volatility, and your dollars will retain their purchasing power. That's why people do that. So they've been forced to, which is crazy. Like it is weird to think about how the world, like what would be different with the world if we just had money that held its value. Suddenly you wouldn't have to speculate, oh, I want to buy a house in 2 years. How much of that should I put in VTI versus holding cash? Like, oh, the housing market went up by 30%. If I'm just sitting in cash, like I can buy 30% less house this year. I guess I got to invest it. And that leads to forced speculation. And the way most people speculate, and I would say it's not investing because most people aren't aware of what they're doing. Most people just speculate by buying into typically index funds, which I'm not saying is terrible, but most people don't know what they're buying. It's like, oh, it's the index. That's what my uncle told me about. And that's what they put in my 401k. It must be safe. That's what most people do. But there's a difference between safety and volatility, and safety and I don't know, peer involvement in things. So yeah, I think I think hard money or strong money that retained value would solve so much of this. We would see a massive exodus out of those types of investments. It would no longer be necessary. You would invest money for growth, but you would also hold your money to spend. I definitely lost the question in that though. What else can I?
That's great. You're bringing up something. I had a tweet recently that I tweeted, and it got a lot of positive reaction, a lot of negative reaction. It's been one of my more popular tweets in the last few weeks, and it was about that. It's about diversification and the presence and theoretical lack of need of diversification. I'd love to pull it up.
I just want to make sure that I thank my sponsors that make my content and these very videos actually possible. They help me be able to make higher quality and more abundant content. So I want to thank my sponsor for this video, or one of my sponsors, and that is Thank God for Bitcoin. The organization run by Christians is a Christian organization promoting Bitcoin, Bitcoin adoption, and hosting lots of events and books and other written work about how Bitcoin fits within the Christian worldview, bringing Christians to Bitcoin, and likewise bringing Bitcoin to Christians. So the event specifically today that they wanted me to tell you about was the event leading up to the Pacific Bitcoin Conference upcoming this October in 2023. Thank God for Bitcoin has an event the day before on October 4th. For only $44, you could spend the day hanging out with a lot of Bitcoiners who also happen to be Christians, or you could say Christians that happen to be Bitcoiners. Some OGs, including Jimmy Song. We're going to have a conversation with him. You'll be able to meet him, hear him speak, ask him questions. I'll be there, as well as many other Christians that happen to be Bitcoiners. You'll be able to hang out with all of us. There'll be refreshments, there'll be networking, fellowship. You can grab lunch or dinner with all of us. So for just $44, that could be something that would be really, hopefully insightful. Maybe have a new perspective when it comes to theology, philosophy, Bitcoin, humanitarian efforts. A lot of Bitcoiners there will be missionaries and people that are focused on bringing Bitcoin to the developing world. So if you want to meet some really cool people, you want to meet some prominent Bitcoiners, you want to hang out with all of us, have a good time, you should get to Pacific Bitcoin in LA this October, a day early, so that you can join us at the Thank God for Bitcoin's event. You can find all the information on their website. Again, that's $44 a person. It's on October 4th, and you can find all the event details and venue information on there once you buy your ticket. I really hope that you're enjoying all the work I'm putting into this content. I do my absolute best to put out as much free Bitcoin-only content as I possibly can. Content about Bitcoin, Bitcoin as a monetary singularity, Bitcoin technically, Bitcoin abstractly. Hopefully not just providing more content, but different contextualizations and different ways of thinking about changing mindsets from political currency mindsets or the ancient mindset into what we believe is the modern mindset or the new information digital age mindset. And while I really enjoy doing that, the reality is that, number one, that doesn't pay the bills, and number two, my time is finite. My time is finite, and there are lots of people that have been seeking me out, trying to find a way to be able to talk to me. Maybe some of them have questions, some of them have Bitcoin businesses that they're just starting out and they want to have either an advisor or a partner or just someone to throw ideas off of. Perhaps they have different asset classes and they're debating what they should do, who should they talk to take the next step, whether that's self-custody or collaborative custody, whatever it may be. Wherever you are in your Bitcoin journey, wherever you are in your investment journey, wherever you are in retraining your brain to think from this new context, my time might be valuable to you. And if it is, I would encourage you to consider signing up for my consulting and coaching group. There are no market advantages in talking to me. I have no market insight. This is not a financial advisory role. This is not a get-rich quick roll. You are doing nothing but buying an hour of my time a month. We can have a phone call or a Zoom call or whatever you want, and we can just talk about whatever you want. Well, the reality is that some of them also have told me point blank that, Luke, I just wanted to grab a slot of time with you because I know in the future your time is going to be even more valuable, and they're probably correct. The demand for my time will probably go up exponentially as Bitcoin value goes up exponentially. So if that's something that you'd be willing to consider, I think it could bring value to you. You could sign up for 1 month, you could stay for as many months as you want, but do be warned that price will probably go up over time. So if you want to check that out, that link is in the description for my coaching and consulting. I hope that it brings value to you, and even if not, even if that's not the right avenue for you right now, no problem. There's still lots of free content that I'll be putting out there, including this video. So let's get back to the content.
When the money is uncertain, diversification into securities and consumer goods is the only thing that makes sense. And so then likewise, when the money is certain, diversification into anything else no longer makes sense. And so then if the Bitcoin thesis is true, diversification as a strategy will fade away. Now, this got a lot of hate. Obviously, it's a little oversimplistic. It doesn't have any nuance because it's, just a tweet, 140 characters or so. But it got at the time recording, so this was just a few days ago, but 15,000 views or so. And so basically the idea there, and then I'd love to hear your thoughts on to what degree you agree with it. Basically the idea being that, similar like we were saying before, is that if the dominant forms of money we've had have been either paper gold, or excuse me, paper currency, or what I call political currency, the problem with that is it's very soft. It's very easy to hold, maintain, and move around, but its value is diluted so quickly and so rapidly that really you can't save it for an extended period of time. And as the currency declines, then the time at which you can hold it into the future only shortens and shortens exponentially. But then the alternate being gold or oil or other forms of harder assets like that. The problem with those is that they're very difficult to move around. They're not very divisible. Obviously there are trade-offs to everything. But really, if you were to take away the negatives of both of those different positive systems and have a way at which money was there and it could be transacted with quickly and efficiently with zero third-party risk, with no intermediaries, and infinitely divisible, which obviously I believe that's what Bitcoin is. Basically, what I'm describing is a perfect money, something with no dilution and something where everyone has a portion of the money and that can't be stolen from them or debased away, which is another theft, which is another version of theft. And so basically, if that's true, then what I think becomes obvious once someone begins understanding Bitcoin is that for decades now, all this monetary value that, just like you're saying, are just normal people trying to save for the future, gets pushed into these assets, like you're saying, gets pushed into real estate, gets pushed into securities and stocks, gets pushed into gold, gets pushed into all these things because people are just trying to save their value in the future. They're not necessarily trying to make money, they're just trying to keep it. But when the money is diluting in value, the only way to keep your money is to make more money because the money is worth less and less. And so then if we were to find the solution to that problem, if we were to find a way to have that good money, then that incentive just completely gets washed out of the room. And so that's kind of my worldview, that there's this world where there's no perfect money, being that when you have infinite cash, as Jeff Booth says, there's infinite cash. And when there's infinite cash, you need finite or you need scarce resources. And then when you have scarce money, you can have a higher incentive to create infinite assets and infinite stuff. And so I don't think, obviously, that Bitcoin negates diversification, but I think that's the transition, that if we were theoretically in that world, there would be no need for diversification. Obviously, we're not in the world, so we still need it. But at least that's how I view the transition, that we're leaving the ancient world, quote unquote, where we have this scarcity of stuff and we have this infinite money glitch, the double spend problem. And now we're transitioning this world where we've fixed that problem. And as a consequence of that problem, now the incentive to hold bonds, stocks, and real estate as a means of purchasing power preservation declines away more or less indefinitely, and perhaps at a faster and faster rate. I think it's yet to be seen. But anyway, that's just my general view on how Bitcoin disrupts the traditional model in ways that people within that traditional model can't even conceive of because they don't even realize that the money itself is a problem. So I'd love to hear your view. Do you fully agree with that? Do you partially agree with that? What nuance would you add there? What do you think?
I'd say I partially agree, in the sense that I agree that the necessity to invest will be reduced. You'll no longer have to invest your money to retain value. You'll invest money to grow your value, but you won't have to invest everything because you will have a portion of money that you don't want to speculate with. You don't want to hope it grows, but take the risk that it goes down. That's the thing. A lot of people don't recognize there's risks in everything you do with your money, and pretty much everything in life. There's risks, there's trade-offs, there's opportunity cost. And like holding the US dollar is risky in the fact that you're subjected to inflationary risk. And if we didn't have that, people would be allowed to hold more of their purchasing power, more of their money in just money. You wouldn't be forced to go in and speculate with it, hoping to retain that. So I think it will reduce the amount of investing. I don't think it'll take it away. People will still want to grow their money, but again, we'll have more ease and peace of mind of saying, this money, I just want to know it's there for the kids. Those are painful conversations I have with people. It's like, oh, I just want to have something for my grandkids, so I'm going to keep it in cash. It's like, your grandkids 4, like, cash will erode between now and when they're in their 20s and you want to give it to them. Like, it sounds like it's safe because, like, oh, at least it's not you don't see a number move daily like Bitcoin. It moves, but so they feel safe in that. But there is again, risk and volatility are not the same thing. And unfortunately, right now, we've been trained to think that they are. A lot of people are trained to think so. So yeah, I would mostly agree, and I understand the nuance that's not available through Twitter. So I wouldn't beat you up over it by any means.
Yeah. Okay. Yeah. No, I would agree with that too. That basically the only reason to put money into these other things is to make more money. And I just think that's going to get more and more difficult over time as technology gets faster, the economy gets faster, whatever. But
oh heck, I mean, look
yeah.
where we're at now. Like Warren Buffett was probably like 2012 or so. He came out and said, hey, if I didn't manage as much money, I would go out and buy as many single family houses as I could. And a lot of people heard that and said, hey, you're right, I should go do that. And now look where we're at. So many people have bought houses. So houses are no longer homes, they're stores of value, which is sad. Like, if you're trying to go and buy a house right now, you're not competing against me and my wife and like another couple who's trying to buy a home for us. You're competing against Blackstone and BlackRock and like 10 other private equity firms. And then 20 other couples who want to get their starter home as well. That, like, yeah, all of a sudden they're fighting to get a house that they're going to be pressed to pay for. Because we substituted a home for a value storage. And that stinks. So I would love to see the money fixed if it's not just for that.
Yeah, and I would say it's even worse and more sinister than that, because not only do you have all this artificially inflated demand for these houses, but simultaneously, as the corrupted money and the corrupted, let's say, banking institutions work together, what they are able to do is they're able to force interest rates lower and lower indefinitely, and able to have more and more of these house values reflect that inflated demand, to where now it requires more and more debt to buy that house. So, like the older the boomers generations and grandparents, those generations, they were able to have much less debt on their houses, where now it requires so much more debt. And so, of course, now you don't only have the additional demand of the banks and these funds that are trying to buy the houses, but they much more easily can acquire the debt to buy the houses. And it requires more and more debt, and it requires longer and longer amortizations in order to pay off these houses. And then, on top of that, you have to have regulations and government red tape to restrict housing, to restrict the amount of houses that can be built. Because if we build too many houses, if we have supply reflect this demand, well, then you just negated the whole purpose. Now the house is no longer a store of value because we're building all these houses that nobody needs. And anyway, it's just horrible. There are just so many negative, unfortunate incentives here. And everyone that is buying houses, both homeowners and landlords and tenants, were all basically guilty of this. Everyone that takes out a mortgage, and that's a big part of why I think Bitcoiners are so focused on the money and not these other symptom problems. Because even if we change some of those symptoms here and there, ultimately we're still going to have the same problem at the end of the day. So anyway, it's frustrating, but that's the world we're in right now, and that's, at least for me, that's the hope of one of the many symptoms that could possibly be alleviated. with change. So, yeah.
Yep. Yeah, that's something that I think a lot of people are into Bitcoin. That's why we all sort of get along on a lot of stuff. It goes back to first principles, which really works out for me. I'm not the smartest guy, so I have to boil things down to their base level. Otherwise, I'm already lost. So I go to its simplest basic principle and just let's just get that, which is really helpful as a Bitcoiner. And I think honestly, that's really probably a better way to do most things rather than getting involved in the peripheral. But so much about politics and so many issues that most people try to address is not the foundational issue. It's a symptom, and you can address symptom all day, but you're just whacking moles. They're going to keep popping up. Versus changing the underlying motive and the means of communication, which I don't know your exact definition of money, but I would define money personally as a means of communicating, storing, and transporting value across space and time. And really, the I'd say probably one of the most important words of that is communicating value. And when money's manipulated, communication is manipulated as well. So yeah, we can go in and try to if we were playing telephone, let's say we had a circle of 20 people playing telephone, and I say, Luke's handsome, and about 5 ways through, it's funny, someone switches it to Luke's butt face or something stupid. Well, by the time, let's say we get to person number 10, and it's like, hey, Luke's a butt face, and it's like, oh no, we have to fix this, the message is off. Actually, what said was this. Well, if we didn't fix the underlying game itself, by the time it gets back around, it's going to be off again anyways, because we didn't actually change the means of communication. We just forced an intervention of like, no, guys, we got to correct this through a third party versus coming and say, no, guys, we have to be open and transparent with what's being said and make sure the actual message is being communicated across to everyone. That's what Bitcoin allows versus this, some things are being said, it's manipulated, and you have some other guy comes in and says like, oh wait, regulate, and then it's going to break again.
Well, basically it just describes the whole political divide right now. And this political divide is nothing new. It happens every time when the money begins to deteriorate like this, and it builds over years and decades, and in many older cases, centuries, but then it just compounds and compounds because you have, on one hand, you have the conservatives, using your metaphor of the game of telephone, that say, oh, we got to go back to what Jim was saying, that Luke's handsome or whatever. We got to go back to the way things were before the game started, back when things were better in good old days or whatever. And then you have the liberals that, like you were saying, want to interject and enter the game and redistribute and move information back around in what they think is more fair and equitable. And obviously what the conservatives miss is that even if you start this all the way back and then you just start it again, it's going to end up in the same spot. And then to the liberals, it's like you're wanting to interject. Well, number one, just like the conservatives, it's going to end up in the same spot, even if you redistributed. But then there's also the moral questions of that too. And so it's just fascinating how when you view money from that lens, all of a sudden all the political stuff more or less becomes theater, because you understand that basically you have these political factions that are both reliant on the corrupted ledger, on a corrupt form of money, and they're just trying to survive that in like a symbiotic relationship, so to speak. The lefties need the hyper-conservatives, and the hyper-conservatives need the lefties, because if one of them were to win over the other, then you just get the infinite money glitch, and then the whole thing collapses. So you need that conflict, because if you don't have that conflict, then it just disappears. Then the whole game of telephone just comes down. You need people arguing over the game of telephone for it to survive. And so anyway, so I love how we've addressed first principles of what's the point of money, and the point of money is not the money itself, but the things in life that money can acquire, I suppose, or assist with, and we addressed the first principles of Bitcoin. So once that's established, how do you explain the future value of that? I mean, how do you do it for your clients? Like, do you assign a price to Bitcoin and say, oh, it should be $1 million, or do you just say it's priceless, or do you just say in terms of this, it should be? I mean, like, I don't know if all your clients or the people you speak with understand it on that first principle solution, but whether they do or they don't, and perhaps it changes if they do or they don't. How do you explain that future value to them?
I think it's innately understood that if you understand what the problem is and that Bitcoin is the most likely solution, then you sort of innately understand, like, this is probably going to go up in value itself. And I'm not necessarily trying to assign a dollar amount. I don't want to play that game. Now, if I'm pressed, like I'll tell clients, and I explain like historically, our average client has held about 10 to 20% of their total investable assets in Bitcoin. Right now, for most of our clients, we are scaling back purchasing of other assets. Maybe prior they're maxing out their 401k. Well, until the next halving, so basically April of 2024. Well, for a lot of our clients, we've taken the gas off the pedal so much on like 401k or TSP or properties or whatever, and we're pressing a little bit more on the accelerator on the Bitcoin acquisition until the next halving period. But before we do that, again, like I explained, like, hey, there's this thing that's coded in when Bitcoin was first created. It's this amazing piece that sort of regulates the issuance of new Bitcoin, and here's how it works. And historically, and I tell them, like, look, this is historical. I don't know if it's going to continue. I don't think it's going to, this ebb and flow of value is not going to continue to be correlated directly with the halvings forever. And personally, I think we'll see decoupling of value volatility in tandem with the halvings, probably around 2032 halving. That's my guess. I don't know, probably way off. I admit that. Like, I'm such a huge fan of, like, look, I'm not going to pretend like the Wizard of Oz. I'm not going to pretend I'm some big smart guy here when I'm actually some dude behind a curtain.
Yeah.
Like, look at me. This is me. I'm not going to put on some facade. And I think people appreciate it all, actually. Anyways, so I don't know what's going to happen, but I do make sure they understand, like, why are we buying more right now? And okay, we're going to do this in preparation for the next halving. Why? Well, I think, like, historically, Bitcoin's gone up. Let's say 10 to 20x from its prior low from the last halving. And I just walk them through, like, here's what a halving means. Here's why it's important. Here's what it's looked like historically. I think it was Pierre Rochard came out with a chart a while back to show the historical movements of time from prior halving. It's a really neat chart. I actually put it on the financial planning like forum chart or website, and man, I got massacred by posting that. But yeah, I use that to show and illustrate. That's not technical analysis. That's a pretty good visual of supply and demand impacts on price. And I talk through clients with that, like, hey, here's what a halving looks like, and here's why we'd probably want to buy a little bit more right now. If we're going to buy any more Bitcoin at an accelerated rate for the rest of history, it's probably now for the next, gosh, now we're at 10 months. So yeah, little things like that. So again, I'm not trying to predict price. Like, all right, that's where most of our clients, unless, again, we just started taking on older clients, we'll call them traditional. It sounds nicer. We just started taking on more traditional clients. With them, we do use some financial planning softwares, but most of my clients, I'm not using financial planning softwares like Monte Carlo analysis and stuff that basically guess and extrapolate data for the next 50 years. It's going to break. Yeah. Like, why the heck would I pretend that my 34-year-old client who owns 2 businesses and they own 20 Bitcoin, why in the world am I to pretend that this Monte Carlo would understand, like I can manipulate numbers. Like, all right, you're going to sell your business when you're 45 for $10 million. Look, you're rich. Okay. Like, I can also make it look like you're really poor. So we don't even use that. We're trying to optimize for most of our families. We're really just trying to optimize what we're doing between now and the next 3 or so years in light of the long-term view. So, yeah, again, like I'm not trying to extrapolate Bitcoin's 2035 value into today and guess around that. Like, who knows? Yeah, there's that piece. Again, I share this video all the time. The video of it's like the morning show in 1994 talking about the internet.
Oh, I know that clip.
Oh, it's amazing.
Yeah.
I love it. I laugh so hard every time I watch that video. It's so great. And I show that to clients regularly. I send it out to them and say, hey, just watch this. This sounds exactly like the conversations around Bitcoin right now. And the thing is, Bitcoin is being adopted at a faster and more diverse rate than the internet was at this time. So if you think the internet use going up between 1994 and then 2008. And then heck, think of like 2008 to present. Like my roommate in 2009 used to buy all the stuff on Amazon. I couldn't figure out, again, I'm sort of slow, take it with a grain of salt. I couldn't figure out what the heck Amazon was in 2009. I was like, you buy Doritos online? What are you talking about? So just think how far we've gone since 2009. And yeah, I think once you start catching these things, like, oh, okay, this is not we're not buying MySpace or Facebook. We're buying the internet. Now I know why we should own some of that. Maybe we should probably own some, just in case it catches on.
Love it, love it. Yeah, and in addition to that, the fascinating thing is that it's still early for the internet. About half,
Yep.
a third to half of the world's population is still yet to adopt it. And so when it comes to Bitcoin, that's the exciting and the terrifying thing. That it's like, wow, we're in terms of adopters, are very early in comparison to the internet. However, adoption is happening faster. Number one. Number two, it's happening more diversely, like you said. And then number three, unlike the radio and the newspaper companies, the fiat currencies are actively punishing their holders. If you were in the early days of the internet, the newspaper companies weren't getting worse and worse every single year and becoming only more and more obvious how worse they were. So it's like you add that in as factor number three, which is perhaps the hyperdrive, that then to me it just becomes obvious. And then on top of that, you have the halving, like you just said. It's kind of obvious with any market. If you reduce the supply by half, and with consistent demand, well, then price should go up significantly. And at least that's what Bitcoin's done thus far. We'll see if that remains true.
Yeah.
But yeah, it's really amazing to think that perhaps this will have a similar degree of societal change to the internet, but perhaps faster and perhaps more equitably, and also realizing that there's a long way for the internet too. And I would argue that even many users of the internet, myself included, perhaps don't even use the internet to its full capabilities and its full magnitude. So yeah, very, very fascinating to think about. So if you were trying to explain this to someone, and obviously none of this is financial advice, but from your perspective, obviously hammered on Bitcoin being the strong case, what do you think has the weakest case right now? If you were to compare gold, bonds, real estate, art, stocks, foreign stocks, like of everything else in the world, if I'm someone and I have a more traditional portfolio, or I'm all cash, let's say, or whatever, like, what do you think people should, or perhaps a less financially advisory direct question. What do you think people are going to withdraw from first? That's probably a better way to phrase the question. What do you think people are going to exit first into Bitcoin, if we're correct in the thesis that people's incentive to invest will decline by a significant percentage?
Well, I'll tell you, I would assume long-term bonds. But I don't know. There's some goofy people out there, man. I met a financial advisor a couple years ago. He was at a coffee shop below my office, and I overheard him in a meeting with a client. And afterwards, I grabbed him, was like, "Hey, like, what do you do?" And he was like, "Oh, I work in finance." And I asked him what he does. He said, "Oh yeah, all my clients have about 80% of their portfolio in bonds, and the remaining 20% in stocks." I was like, "Wow, that's crazy." He's like, "Yeah, but I've been doing this since 1982, and it's worked out." And I was like, well, we're pretty low on interest rates. One, like, what kind of yield are you getting? And two, what are you going to do when interest rates start going up? He's like, look, I've been doing this since 82. That's what I just said. It's only made us money. I was like, do you forget how the bond seesaw works? Like, interest rates go up, your bond values go down. And sure enough, I saw him a while after that at the gym, and he was like sweating. He's like, Jim, we're getting demolished on bonds. How are you doing? I was like, well, we don't really own long duration bonds. So, as long as the Fed keeps saying, hey, we're going to keep raising interest rates, like, one big thing out there, like with its target on its back is long duration bonds. There's that, and heck, forget interest rate hikes and all that stuff, because one day the Fed will pivot, and at that point, like, will longer duration bonds actually start going up in value? Like, historically, yes. But if we remove interest rate risk and all of that stuff with the duration impacts, let's remove that and just talk through safety of bonds. And I'm not even talking about junk bonds. Let's talk about safety of, like, relatively large, like small, medium, even large countries, like sovereign debt. I think people are going to start realizing, like, wait a second. Heck, I mean, other countries are doing that with the US. It's like, hold on. We own US debt because we've been sort of forced to, but we don't really have to anymore. We're going to collude and no longer start buying this stuff. Other countries are starting to do this now. And frankly, I think that's good. Like, does it hurt us as Americans? Yeah, but, like, it helps other people out. And that's okay. It's sad. If you think about, like, the necessity of things breaking, I hope it breaks in the least painful way possible. But a cleanse is necessary, and things will break. Think through like a forest fire. Like that's where Southern California has these terrible fires because every time a small trash can fire pops up, it's like put out real quick. It's like we got to protect all these houses in a desert that we're trying to make it look like it's Hawaii. It's like, dude, that's not Hawaii. This is a desert, man. You just pop some palm trees in. So we put out every fire. Then before you know it, we have feet and feet of undergrowth that's built up. And we can keep putting that out until one day a spark's going to hit and it's not going to be able to controlled.
Yeah.
And that's what we've done with the markets. We've done that mostly with sovereign debt markets. Is we've put out these fires over and over again through this massive boot of the governments. Come in, we stomp it out with our big boots. But then one day a match is going to drop and it's going to cause it to burn down. But hey, you know what? After a forest fire, you get nice, beautiful, lush green. This picture right here. This is in Jackson. This is in Grand Teton National Park. That's on the Teton Glacier Trail. And that starts off right by Jenny Lake. So when you start off, you're sandwiched between Jenny Lake on your left and the Tetons are on your right. And it's beautiful. The Tetons are these massive mountains. And just before you get the Tetons, you have like, they're not foothills. It's the beginning of the big mountain. And it's all just, I bet, I don't know, 10 years ago, whatever, it was scorched. Now it's really pretty small trees that are super vibrant and green. You know why it's like that? That it looks so vibrant? It's because it burned down a few years ago. And that's necessary. It's healthy. So that's where government intervention is. Again, it's been this big boot, but one day something's going to pop up. It's going to stink for a lot of people. It really does make me sad thinking about these old ladies who own a pension that has no or like a 1% COLA, cost of living adjustment. And right now they're like forced to eat hot dogs 3 meals a day. And like they're getting booted out of their house, like because their deceased husband pension is what they got, that and the Social Security. It's like, man, that's so sad. And those people are going to get hurt more. That is devastating. Like it really does make me sad. That's why I love my job, is helping these people. So that's why I'm trying to help people understand like what could happen, like what's going on with the money. And it doesn't make sense. If you don't understand economics, it doesn't make any sense. It's like, oh, it's because the greedy corporations. Yeah, since every like 4 years, corporations get together like, hey guys, I know we've been making some money. Let's make a lot of money right now. Like, that's not what happens. Like, who thinks that? Why would collusion of like to have big picture? I'm not talking about small manipulation like we had with the Rockefellers or something, but like actual big macro inflation. How could that start through just like collusion of companies? It's the money, but people don't think through that. So that's where like getting this message out, like, dude, the money's broken and we've got to fix it. That's exciting stuff. I think that's why there's so many people in Bitcoin who are so passionate about this, is because like we've seen something and we want to help people. We want to help change the narrative and help bring people financial hope and in the future.
Yeah, that was really well said. So many great metaphors there, so many great examples. I love the forest fire metaphor. I mean, that's essentially exactly what's been going on. That's human nature. You know, like you were just saying, that it's not this cartoonish version of, the banksters or corporations all getting together, rubbing their, I think, again, back to the political, I think all the conservatives think that these liberal politicians just rub their fingers together. And I think all the liberals think that all these conservative businesses, it's just so cartoonish. Whereas like the reality is just that we're all humans have this greed. And if we are able to create this button that we can just push and delay the forest fire, it's like, who's not going to push that? Like I would push that, and like, when it comes to 2008 great financial crisis, when it came to the dot-com bubble, back and back and back, it's all the same thing, that as soon as we start facing the reality of this credit unwind, we push the button, we delay the forest fire, and then now you've increased the risk in the forest, you've made it more flammable, you've made the eventual fire only bigger than what it would have been before. And it's like you delay, in the same way that we delay gratification, we delay this negative pain that would make the problem worse and worse and worse. And then like you're saying with historical examples, I mean, I don't know about you, but I love history. And that's one of the big things that thankfully for me, I think really helped me to understand Bitcoin. Because it's like when I understood history from the lens of money, I understood, oh, well, the position of the United States is obvious. What happened to the Portuguese and the Dutch and multiple Chinese dynasties and multiple other European powers, the French and the Germans and everyone else. It's like it's all the same thing. You have one major power that rises up on technology innovation. You have great demographics, and then the demographics age, the money gets more corrupt, everything starts to shift, and the global share of the economy and energy and everything else gets shifted towards other nations, kind of like we're seeing now. And then when that advantage for the power declines, well, then you can't dump your bonds, you can't dump your debt, you can't dump your cash on everyone else as much as you could before. And so, yeah, yeah, I basically in full agreement with you that I think people, and frankly, because my generation, like we're not buying bonds. It's like we're not. I don't know anyone my age, like even people that hate Bitcoin, they're not buying bonds. They're buying Pokemon cards or they're wanting to get into real estate or stocks or meme stock. It's like even the most risk averse people I know my age, like even under 30 or 35, it's like they're not buying nearly the percentage of bonds the older generations are. And like you're saying
Yeah.
with it being sad with the old lady, I mean, I think it's sad too. And I think right now it's sad for the younger people because the older people are benefiting at the expense of the younger people. And and probably what I think will happen is that as that unwind occurs, probably then the old people begin to suffer in the same way that the younger people begin to suffer too. Because my generation, we're having trouble buying houses because wages have not kept up with house prices, and it has to be that way for there to not be a credit unwind. And anyway, it's a lot to think about. And like you, I'm excited for what potentially could change. Hopefully, people have more time in their lives. They don't have to spend as much time speculating. They don't have to spend as much time keeping up with the rate of theft, and they can spend more time with their families and their loved ones. So anyway, um, yeah, it's really encouraging. It's really exciting. So um, yeah, I don't know what to say about that. Yeah.
I love it.
Do
Good.
your clients get that? Do they see the vision, or do they just take that 10 to 20% allocation of Bitcoin and they just go on with their life? Which that's fine too, and probably most people should be like that. But what do you think?
No, I think most of them really get it. It's like, wow, this is something bigger than whatever. Like this is
Yeah.
something I maybe initially will buy it. Like again, I'm really big on education. And as you probably learned in the last hour, I over explain everything because I don't want them to what I don't want to have happen is like maybe they do buy it as an asset just for number go up or whatever. But then all of a sudden we meet and 2 weeks later they're hanging out with a friend. The friend's like, your financial advisor had you do what? Did you know that X Bitcoin's going to cause the oceans to boil or whatever? Like, I don't want them. I want to front run any FUD that they'll encounter. That way, when they hear it, they're not, oh man, he didn't mention that. I guess he either tried to hide it or didn't know. Or rather, here, I'm gonna make sure you're aware of these things. So I think by probably over educating, that does have this conviction and not just conviction of like NGU tech, but actually like, okay, this thing's pretty cool. Hey, actually, this morning, I went out to a client's house and we moved his Bitcoin off of exchanges for the first time. Bought him a wallet, helped him move it, and he is I would say of any client who is like I think he thinks he's pretty funny. He's of any client uses me in the least traditional manner of any of my clients. But we went out there and he was like, look, I buy Bitcoin because you said it's going to probably go up, so I'll own this thing. But when we were moving it, he was like off his wall. He's like, hold on, what's happened? This is witchcraft. This is crazy. So even him, I think he's starting to understand like, wow, this is amazing. He actually mentioned a company that approached him about using Bitcoin for real estate transactions and stuff. And we started talking about processing fees and how like Bitcoin processing payment fees are just way lower versus like he sells like high-end ranches. Like, man, if you sell a $10 million ranch, the transaction fees on that are astronomical versus using that over the payment rails of Bitcoin. That makes a big difference. Like tens of thousands of dollars of needless fees just saved. So it's little things like that. You have to meet people where they're at and what's important to them. And that's what makes this exciting. Working with individuals and families to help them connect these dots. Man, I got lit up last week. I want to start a new company just helping local, like little mom and pop shops in my town adopt Bitcoin for payments. I had to use a payment processor for another company I started, and I was forced to use one. I won't use their name, but most people have used them. And after I'd been paid through them, I got a letter like, hey, we need more information about this company so we can actually send you the money. It's on their portal right now. So they asked for like tons of info that was unnecessary. It was crazy the questions they were asking. So I answered their goofy questions. And then I got emailed the next day and was like, hey, we reviewed your answers and we're not going to allow you to use our payment processor. Also, the money that and it was several thousands of dollars. The money that you have on our portal right now, what happens with it? Well, we're going to hold on to it for 3 months. So it'll be released September 7th or whatever date is. When we release it, it'll go to the bank on file and it'll take roughly 5 days to process. Then you can withdraw the money. It's like, hold on. One, give me the money. Like, this is a payment rails system. Why do you need all these questions answered? This is none of your business. Two, you didn't like my answer, so you're going to hold my money captive for 3 months. And in their email, it said, this is our final decision. Now you're going to hold my money captive for 3 months until you release it. Like, that's absurd. And they charge me 3% to do all this. Like, I think when people like small businesses,
they're like robbing you.
Yeah, it's funny now because they keep their emails like from this company. It's like, hey, if you liked our payment system, you should really use this as point of sale system. It's like, dude, I wouldn't touch you with a 10-foot pole. So you think about like, local bakery. There's a bakery right down the street from me that I like to go to too often. It's like, man, how much 3% of their transactions are going to these goofy companies. Like, what if they use Bitcoin? They would have so much more money to actually invest back in our community. Like, that stuff's exciting as well. Like, so many people have so many different reasons to have a better form of money. So,
well, I've been seeing that more and more where places will say there's 2% or 5% upcharge for using credit cards, and they prefer cash. And it's I mean, frankly, cash is more of a hassle because you have to like actually count it. There's change, but it's like it's so much cheaper. So anyway, so many reasons, and I think perhaps the most exciting thing for me is it's within everyone's own incentive of self-preservation to adopt Bitcoin, and hopefully we'll see more things evolve from there. So
yeah, I agree. It'll be fun to watch.
Definitely. Well, I appreciate your time. I guess if you have any last thoughts, I'd love to hear about not just like on a life level, but I mean, how do you encourage people to have an even longer time preference even after they're gone? I know that you and I are both Christians. I was just wondering, like, is that involved at your business at all, or is that something that's difficult to do in something so secular like money or so worldly, let's say?
I mean, yeah, a Christian is foundational who I am. Like, that's paramount in everything. And as a Christian, everything I should do should be a part of a ministry. Like, I've been born again. Like, man, that's amazing news. That impacts everything I do. Like, I would not be me if that wasn't that. Like, I was dead and now I'm alive. It's incredible. Like Bitcoin and money and all that stuff. Even like, that's where Bitcoiners are hilarious. It cracks me up. And the cool thing, because it's this quest for truth. The funny thing is, so many Bitcoiners think they found truth because they found hard money, and it's like, oh, and we're gonna eat meat and get married and have lots of kids. So I found truth. It's like, dude, you have no clue. You're not even close. Like, Jesus, like, truth is a person. His name's Jesus. There's so much more. Like, Jesus actually said that, hey, if you follow me, like, you might even lose your son and daughter. Like, that stuff, your money, who cares? Give it away. Jesus don't want your money. He wants all of you. He demands all of you. Like the rich young ruler who came to him, said, hey, how do I get into heaven? He said, well, you got to obey all the commandments. He's like, oh, I did all that. And Jesus smiled at him and he said he liked his answer to that. And like, he liked the man. He grew fond of the man. And he said, okay, if you've done that, what I need you to do now is go give away all of your money. Go give it all away and then come and follow me. And he said that he went away sad because he had much. See, Jesus didn't say that to everyone. He didn't tell all his disciples to go and sell everything, but he told that guy. Why? Because he knew that guy. That's the thing that was keeping him. He liked that. He wanted that more than he wanted to follow Jesus. It's like, man, give it all up. He's worth it. So yeah, how does that impact my job? I'm not here preaching the gospel to my clients every time I meet, but it's something I managed to work in. Like, you pay me to care about your money, so I do, and I've studied this stuff a lot. I really care about you, and I love the people I work with. It's such an honor to get to serve them, and like, of course, like, let my good works be shown, and this light shine before men, then they praise God for the good works they see. Like, yeah, I want to live that.
Amen. I hope I can live that too, and I hope as many people can live that as possible. So, Jim, thank you very much. Really enlightening, really enjoyable. Appreciate it.
Yeah, thanks for having me, Luke. I appreciate it.